We are just one day away from the U.S. slow fund payrolls report, and despite a series of U.S. economic releases earlier this week, FX markets have shown little volatility. While none of the reports has significantly surprised investors, leaving all the attention on whether the U.S. and Iran will finally reach a peace deal, and of course on tomorrow's jobs data. But what caught my attention is the market structure in Aussie dollar and dollar loonie. While looking at the impressive record rally in U.S. indices such as Dow Jones and S&P 500, some of the stocks, key stocks particularly in the AI front such as Nvidia, are also showing some interesting technical signals. So let's have a look at those charts and let's analyze first Aussie dollar. Well, as we can see, the pair has been eagerly fighting for a rebound since the end of June. It managed to hold the floor around this key support trend line coming from spring 2025, and it looks like it's now heading for is testing another key area which coincides with the neckline of this head and shoulders pattern over here, emerged near a 4-year high 0.7276 in spring 2026. Looking at the technical indicators, we can see that the RSI and the MACD are in the bullish territory. We see some weakness, but the RSI is still above 50 and the MACD is trying to strengthen above its zero line. However, if we look at the stochastic oscillator, this is already above its 80 overbought level, so that requires some caution. I would probably need a confirmation to target higher levels. I would like to see a clear close above this area 0.77 in order to target the 0.7120 constraining zone, which blocked upside movements a couple of times since February 2026. And then beyond that, all the attention might turn to the resistance region near 0.7190 and even towards the 0.72 psychological level. Now, with the event of a pullback, if we fail to cross above 0.7070, well, perhaps selling pressures may strengthen below 0.7020. In this case, all the attention will turn back to this key support trend line currently seen near 0.6980, a break of which could drive the price back below its short-term 20 and 50-day moving averages and towards the longer one, 200 SMA near 0.6920. Now, looking at dollar loonie, well, this is also an interesting case, an interesting market to watch. It staged an amazing 5% rally back in April and towards the 1.4246 level, which was the peak of this uptrend in June. Since then, it has been retracing gains. It almost reversed a third of this rally, and with the market outlook almost, well, actually neutralizing below the November 2025 high of 1.4139. Now, the key question here is, will this decline continue? And given the latest pullback below the 20 and 50-day moving averages, it seems that the risk is more skewed to the downside, in which case probably the 1.3950 and 1.3980, which coincides with the 38.2% Fibonacci retracement level of this up leg, could come first into view. Failure to hold here could trigger another downfall towards a 50% Fibonacci at 1.3897, while a steeper decline may even reach the 61.8% Fibonacci of 1.3815 unless the 200 SMA near 1.3845 manages to block additional declines. Well, if we look at the technical indicators, we can clearly see that those are reflecting a bearish bias. The RSI is trending below 50. The stochastic oscillator is pointing to the downside, and the MACD is weakening below its zero line, all supporting the negative case, the negative scenario. Now, in the event of if U.S. jobs data surprised significantly to the upside, helping the U.S. dollar to regain some strength, then I would watch for a break above 1.483. This is where the 23.6% Fibonacci level is located. A break of above this area and beyond this resistance trend line could take us up to 1.4 to 140. A successful penetration here would then lift the price towards the key resistance area between 1.42 and 1.4250, where upside pressures eased back in June and early in July. And finally, looking at Nvidia stock, well, unlike US indices such as the S&P 500, Nvidia stock has yet to reach a new all-time high. However, there are some interesting technical signals which can support a bullish scenario in this market. First of all, the price managed to hold a key floor around the support trend line coming from April 2025. It then rose above its simple moving averages and surpassed the key resistance region, surpassed this resistance trend line near 210, which acted as key barrier last week. And now the focus is on additional gains, probably towards the 231 region last seen early in June, and then beyond that, additional gains from here could probably hit new all-time highs near the 250 region, where the extension of this resistance line that connects all the highs from June 2024 is located. Beyond that, while the 265 territory is the Fibonacci extension of this downfall that emerged from June. So that could be another level in focus if gains stage a parabolic vertical increase. So now on the downside, although the on the downside, the 205 level could be the next support if negative pressures emerge. That wouldn't actually significantly downgrade the bullish case, which the technical indicators support over here. But any declines below that could probably shift all the attention back to the support region near 189, where the price bottomed out twice since the end of June. Well, then a failure to hold here could worsen the short-term outlook, could shift the bias back to the downside, likely triggering a faster decline towards the 163, 170 number. So that's everything I wanted to share with you guys. We'll keep a close eye on tomorrow's NFP data, and of course any headlines regarding the peace deal that between the US and Iran, once of course Iran and Oman manages to reach a deal on the Strait of Hormuz. So that's all from me. Thank you for watching. Stay tuned, and we should have a great trading ahead. So bye bye for now.